So welcome everyone to the first video of Crypto Insider. This channel is all about teaching you how to trade cryptocurrencies. I started this channel not because I want to become some crypto influencer, but actually because I'm a bit fed up with the information, or better said, the misinformation that gets spread around YouTube and other trading platforms. I think lots of the information is misleading and points you in the wrong direction rather than in the right direction. And I think many people that start with crypto or jumped into crypto in 2021 or 2020, they are about to potentially make a lot of losses and do a lot of the mistakes that I also went through in 2017. And so to prevent that from happening, I think we need to go over some aspects of how these markets work and how you are on the right side of the trade so you don't lose any money. I think this is very valuable information for everyone. So let's dive in. All right, so first, we need to look at how to price a cryptocurrency. How do we price a cryptocurrency? Well, there's a few aspects to take into account. First, you have the price of money versus the price of an asset. So, as everyone might know, interest rates are very low. Ever since the market crash of 2008, the Federal Reserve started a program where they buy government-issued bonds and they lower the interest rates. What happens then is that you get a lot of money that is being put into the market. We can see that in the money supply. And we can see that since 2020, more than 30%, almost 40% of the money supply has been put into the market. So there's a lot more money in circulation, a lot more dollars in circulation, which obviously puts down the price of money. On the other side, we've seen that Bitcoin and a lot of cryptocurrencies and stocks have been shooting up, or the price of houses. So we are in a time where money is cheap and assets are expensive. All right, why is this important? This is important to understand the fundamental growth factor behind the market. This means that if money is cheap, assets will get more expensive. But if money gets more expensive, assets might and will become more cheap. Keep this in mind where you think we are right now. Are we gonna put more and more and more and more money into the system, or is the Federal Reserve gonna taper, as they said, well, for already like a few times now, that they will taper their support program, which means they will start buying less bonds, government-issued bonds, and they will increase the interest rate, which means the price of money will go up. That also means the price of assets will go down. Okay, next thing to look at, fundamentals. Regardless of whether you invest in stocks or in cryptocurrency, you need to look at the fundamentals behind a project, whether that's Tesla, Bitcoin, Ethereum, whatever. And you look at the future growth / the adoption of a certain project, company, whatever. So for example, Tesla makes electric cars. Electric cars are It's a growth market because that's where everybody wants the car market to go, to get more green. It's debatable if it's more green to manufacture a lot of new cars instead of keep driving your old one, but that's something else. So it's a growth market. And then you look at competition. Well, Tesla, for example, doesn't have a lot of competition in the electric car segment. Obviously, now the conventional car companies are jumping in, but it means that right now Tesla is on pole position because they're the head of the curve. They're the first adopter of this market. Then there's regulation factor where, well, regulations are in favor of electric cars. They even get subsidies. So that's great. Well, if we look at fundamentals of crypto, we can see that crypto has a future growth, has future adoption, where DeFi and cryptocurrencies and blockchain will be used for traditional finance, which means that, there is a lot of growth, but there is also a lot of competition. This means that you need to pick out the right cryptocurrencies that will potentially beat their competition. Yeah. So look at last cycle or this cycle, Solana had more of a growth and adoption than, for example, Ethereum. Why? Because Ethereum was already very much adopted, and Solana is a competitor of Ethereum. Also, regulation is something that the crypto markets will go under through, so they will be much more regulated. They will have much more rules, which you might think it's bad, but it's actually a good thing, because this means that a lot of institutional investors, also pension funds, insurance companies, etc., they will be able to buy and hold cryptocurrencies. They will be able to invest in crypto in the long term. We're not there yet. Then we need to look at technicals. So I'm not talking about TA. I'm not talking about technical analysis. I'm talking about the supply of coins. If you have many coins in circulation, obviously this will put the price down. But this doesn't really matter. It doesn't matter if you buy a coin that's worth $1 and it goes up by $1, which means it goes up by 100%, or you buy Bitcoin at $30,000 and it goes up to 60,000, which is also 100%, right? So it doesn't really matter. The price of an asset doesn't really matter. What does matter is the max supply versus the circulating supply, right? So what does that mean? Is that every cryptocurrency has a max supply. Some even have an infinite supply. That means that they can keep creating new and new and new coins. Dogecoin is, for example, an example of that. Ethereum was like that. They have a new structure where they burn tokens as part of transaction fees. And you have to really look at what's the vesting schedule of early investors that invested in this cryptocurrency. For example, at the end of the year, or let's say in January, where a lot of investors that invested in Solana are going to be able to sell 20% of their initial investment, this will put a lot of pressure on the price. A lot of sellers will come into the market. Why? Because even if Solana falls back to, let's say, $100, these guys bought their Solana tokens maybe for $1 or $2. They still have 100 or 50x profit. So for them, $100 Solana is still on the moon, right? So you have to really look at the websites of the specific tokens you're interested in and see who invested in it and when are they able to sell, because they cannot sell their bag straight away whenever they want. There are certain vesting schedules, they call that, where they can, each year they can sell 20%, for example, of their initial investment. It's different for every coin. You have to check the token economics, usually is that called, of a specific token. Furthermore, and this is not very much talked about, there's only one YouTuber I know that talks about it. His name is Traders Reality, great channel, although it's a channel which is more focused on short-term trades. So we here are trying to cover all kinds of strategies. Get on to that later. So, also hodler strategy. So let's look at market maker. What is the market maker? Market maker provides liquidity, aka capital, to the markets. It provides a certain supply of Bitcoin, a certain supply of Ethereum, a certain supply of Solana to the markets. And market makers, they work with the exchanges, and the exchanges, they have a certain criteria for coins to be listed. So usually exchanges do not list scam tokens. Okay, there's a lot of scammy tokens that are somewhere at the bottom of the list. These ones don't get listed. Usually the market maker invests, or the exchanges list tokens that have some sort of fundamentals and technicals behind them which they can support, and obviously some form of future growth. So what you have to understand is, where does the market maker buy? From who does the market maker buy tokens? Yeah, from you if you sell. Yeah, so whenever you place an order on an exchange, it goes like this. You are the client, you place a buy order, for example, to the exchange. The exchange wires that through to the market maker, yeah. And then the market maker fills that order. Let's say you buy 1 Bitcoin, then the market maker pings back to the exchange, say, okay, here's 1 Bitcoin. Exchange says, okay, order is filled, and now on your balance you have 1 Bitcoin. This is how it works. A lot of people think some person in the market is selling and I'm selling or buying from that person. Yeah, so most people think, oh, I place an order and someone else has a sell order and this gets filled towards each other. This is wrong. False, completely wrong. Why? Because when prices are going up, yeah, and you have to think also more years back, Bitcoin at 3,000 or 3,500 in March 2020, when we had a crash because of the pandemic. There you will see a lot of people selling, but as soon as Bitcoin goes back from 3,500 to 5,000 to 10,000 to 15,000 to 20,000 to 40,000, etc., 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 who's going to sell? No one's going to sell, right? People want to buy more because they see that their investment is going up and they think, wow, Bitcoin to the moon. I'm not selling my Bitcoin. Hodl. I'm getting rich, right? So whenever prices are going up, no one is selling, right? So if no one is selling, who are you going to buy your Bitcoin from? Because there's still Bitcoin to buy, right? It's this Mr. here. It's Mr. Market Maker, yeah? Mr. Market Maker provides liquidity, which is just capital to the markets. That capital can be in dollars when you sell your Bitcoin, and that capital can be in tokens, in cryptocurrencies, whether it's Bitcoin, Ethereum, or any other token. He provides that liquidity to the market. And liquidity just means there is offer on the markets. There is a certain amount of Bitcoin available for you on the market. There's a certain amount of dollars available for you to sell your Bitcoin on the markets. That's market making, all right? So, who are the customers of the market maker? Well, that's us and the exchanges in a way, because the exchange pings a market maker to make sure that the exchange is always liquid. There's always offer. There's always, there is no use of having an exchange that runs out of Bitcoin. You come to Coinbase, you come to Binance. Yeah, sorry, today there's no Bitcoin because no one wants to sell, right? Here, they work with the market maker that always ensures a buy or a sell. Next to that is, how does a market maker make profit? Well, some of you might have played around with leverage, or some institutional traders, they buy options. Options come in the form of a put and a call, which basically is a contract where they can buy or sell Bitcoin at a certain price if it reaches a certain price when this contract ends. All right. So a futures buy or sell would be, okay, I go 10x long on Bitcoin. Bitcoin is, let's say, at 30,000. I think it's going to go to 40,000. I go 10x long and I get 10 times the profit for this particular move. But if the price goes against you and the price drops by 10%, you get liquidated. Yeah. So who gets paid then? You have a contract with the market maker. Okay. So that's the same as this order. You have the contract with the market maker. Yeah. So the market maker's interest is to either liquidate you or hit your stop loss, because a stop loss still means money for the market maker. Most people don't put their stop losses in profit, they put it in a loss. Yeah. And all these orders, that's a stop loss is an order, a take profit is an order, a liquidation point is also an order. Market maker can see those orders, right? So that for the market maker, they just have a calculation, an algorithm. It's like, if I move price up, I make this amount of money. For example, when a lot of people went short on Bitcoin, they move price up and they liquidate a lot of people. So they make money from those liquidations. But if a lot of people went long and they dump price, they make a lot of money from the people that went long. So whenever you place a trade, especially a leveraged trade, you have to understand that the market maker is in the opposite side of the contract. And so the longer you keep that trade open and the longer you give the market maker a chance to go against you, he will do that. All right. Let's go over some trading strategies. Let's really keep it simple and understand how a market works. This applies for every market, whether it's crypto or stocks or whatever, right? There are a few different trading strategies, yeah? First, you have the HODL strategy, which is more investing, pretty much. If you want to HODL an asset for a longer time, and many people, they are like, yeah, I don't really know much about trading, so I buy Bitcoin and I wait for the price to go up. Or some even say I never sell my Bitcoin, and they think they will get rich like that. This would have been right if you bought Bitcoin back in the early days, somewhere before 2013. Then you would be very okay right now. But at this point of time where Bitcoin is over $1 trillion market cap, this does not apply anymore. So you have to think, okay, how do I have a decent HODL strategy? Well, bull markets and bear markets work in cycles. So you have a bear market and you have a bull market, all right? A bear market usually characterizes by coming out of a bull market. So let's say we were here in 2017. Let's say price were up here, and then it crashes down to Bitcoin 3,000, Ethereum back to even $90, something like that. And as a hodler, this is the point of time where you want to DCA in. A lot of people are talking about dollar cost averaging. Okay, that just means that you buy at a certain time period. For most people, buy €100 Bitcoin every month. Wrong. Absolutely wrong. Stupid strategy. Yeah. You DCA in what you can do, right? So because people want to, what's a good strategy for DCAing? DCAing is fine, but it's the point of time where you start DCAing. So let's say you're late, yeah? So you are somewhere in the in the bull market, and you're like, shit, I didn't buy any Bitcoin, and now I'm losing out. I'm missing all these moves. That's why people are so eager to buy, when prices are up here, right? Because they are feeling like, hey, I'm missing out on something and I should buy Bitcoin. Well, this is the psychology of the market, but this is the wrong strategy. If we're somewhere here and you're like, shit, I didn't buy any Bitcoin, I should buy now or else I miss out on profit. Wrong. What you wait for is Bitcoin to come down back into a bear market status. That's where you buy. Okay, so how do you do it? Imagine you have a DCA strategy. You put apart $100 every month on a savings account somewhere where you don't touch it. And so you don't buy Bitcoin every month, you wait till we're back in a bear market. Okay, so how does the cycle work? A bear market is usually inside of a range, yeah? So let's say Bitcoin 3,000, Bitcoin 8,000. And it keeps going up and down between that range until the point it breaks out. And then usually we go to test all-time high. Yeah, previous all-time high, let's say this is 20,000, retrace, and we break out of previous all-time high. This is where we're in a bull market, okay? So in the bear market, you DCA. Yeah, you buy here, you buy there, you buy here, you buy there. Try to buy as low as possible. And then when we get into a bull market, you DCA out of the market. You dollar cost average out. You sell your Bitcoin. You can sell here, you can sell there, you can sell here, you can sell there. And then the average price is more or less the middle. You don't wait for price to crash down because markets, they take the stairs up and the elevator down. So it can really crash down straight away, right? So you don't wait for a crash. You DCA out of the market in profit, because investing is not about making life-changing money. That's bullshit. That's mad bullshit, all right? Investing is about having consistent profit. Why? Because in the long term, when you have consistent profit, this is how you make money. if you have $1,000, yeah, you have $1,000 to invest, yeah. This $1,000, yeah, you want to, on average, you want to double it every year, yeah. If you manage to double this $1,000 every year, after 10 years, what do you think you have? What do you think you have? You have this. 1 million euros, okay? This is how you fucking invest, yeah? So this is what it's about. Now, okay, hodl strategy, DCA in the bear market, DCA out in the bull market. And then when, let's say this is the bear market again, DCA in again, right? That's how you do it. Swing trading, that's not a strategy. Swing traders, they try to trade every swing. So they buy here on a low, they sell here on a high, they buy here on a low, they sell here on a high, they buy here on a low, etc., etc. And then they can also short here on high, take profit, short again, take profit, short again, take profit, okay? That can be long or short. You can be a bull and a bear. This is pretty much my trading strategy. But you need to be technical. You need to know technical analysis. You need to know all of these things above that make the price of an asset. And you have to know where you are in the cycle. So these cycles over the long run, yeah, they work like this. W formation at the bottom, a double bottom, yeah, where you can see price does not go lower than a certain amount and it stays ranging inside of a trading range, yeah. And then price goes usually up with 3 impulses, 1 or 5. Some people say, okay, so 1, 2, 3, 4, 5, okay. Then you have a peak formation at the top, yeah, and then you have basically 5 impulses down again. 1, 2, 3, 4, 5 down. All right. This is where you start buying again. Here's where you sell. Okay. Scalpers, they have a different strategy. They act like swing traders, but then on a lower time frame. So instead of having just a few moves along these cycles, they have lots of mini moves along the 1 hour, 15 minutes, sometimes even 1 minute time frame, where they make use of the volatility on lower time frames to make their profit, right? And usually scalpers are trading with leverage, but they're in and they're out, okay? They're fast in, fast out. Okay, so this is pretty much what the cycles look like. It's very important to know that the bottom of a cycle or bottom of a price range looks like a W, where price gets rejected out of a low, and the top of the range looks like an M, where price gets rejected from a high, okay? Usually the second high is a bit lower than the first high, but it doesn't have to be. It doesn't have to be. If currently we have in Bitcoin, we have something like this, it's still an M formation, right? All right, so these are the basics behind trading cryptocurrency and in general investing. And it's very important that you understand how that works. So let's look at Bitcoin. Let's look at Bitcoin. So right now, this was where we came from, okay? Let's scroll a bit down. Here we have the bottom of the range, which is when the pandemic hit. And from there, we went up in the bull market. So we all know that. And you can clearly see what a peak formation looked like. Look at this. M formation here, M formation, right? They don't look like beautiful M's, but it's more or less how they look like, yeah? The top of the range, which in this case was 65. This is also where I sold my Bitcoin and went short, which was a great move. And what happened here is that, we came down, we came back up. Usually there's these aggressive moves down where people think, okay, Bitcoin is going to go down to 20K and people go short here. And then, bam, market maker pushes back up to get everyone out of their short. This is very important to understand, that they always will move price against the sentiment, or at least against what they have as contracts. If a market maker has a lot of short contracts, they will move price up. If a market maker has a lot of long contracts, they will move price down, right? So where are we right now? Well, we come out of a peak formation, we come down, we form here like a W formation. You can clearly see it if you draw it out. Yeah, that's a W, all right? But the problem is that, like, traders get more and more smart, right? So the market maker needs to be a bit more smart about how he's managing certain expectations and things in the market. So here, what you could say is that we have a sideways correction, right? This gets already a bit more technical, but basically till this point you have 5 waves up, and a sideways correction comes in 3. A correction usually comes in 3. If a correction is more than 3 waves, we usually go into a cycle down. So that's the Elliott wave correction. And for example, let's look at this. This is a correction from 61 to 48. That's A, B, C. That's a standard correction, right? 0, A, B, C, okay? So we got a second high here, and then again we have something that looks like an ABC correction, because look here, A, B, C, and back up, right? But what happens after? We come back down again, and this is the point where you should be already out of the market, but at least if you're still in, you should get out, right? Because you don't want to sit on your coins and get a move like this, right? Because for Bitcoin, this was a 50% move, 47% move. For most altcoins, that was way worse than that, right? So if we have a W formation here, we have basically a mini bear market, yeah, W formation, and we move 1, 2, 3, 4, 5. Here you got it. Like this is your top here. Now then, it doesn't always mean that I catch the top, right? I didn't catch this top because I did expect Bitcoin to, on this specific move, to at least go into the 70s, or from here go into the 70s, yeah. But that doesn't really matter, right? I mean, sometimes you cannot always be right and time the markets. Like, you can understand a lot, but you just have to roll with whatever you have. I wasn't in Bitcoin, I was in altcoins. So altcoins, even at this point, they were still way in profit. So I take my profit and I'm out. Here I was like, okay, here I'm out, because you can see A, B, C going up again and then going down again, right? You could call this a double bottom, but then again, boom, another time down. So this range, this was the point to get out. because you know it's problematic. Then even what gets even worse is that the 20-week SMA is the bull market support band. Like in bull markets, Bitcoin stays above these SMAs, okay? When it goes below it, we usually hit a bear market. You can see it here, boom, bear market, at least the small one. Back in 2017, let's scroll all the way back. Here, Corona dump, here's the 20-week SMA, boom, down, yeah? Bear market. This is 2019, little bull market, goes below the 20-week SMA, gets rejected from it, boom, bear market. 2017 is right here. I should go on a bit of a higher time frame, but let's go on the day. Oh, here we are. Yeah, bull market. Yeah, everyone happy. Like, you have to understand that when Bitcoin was here at 20K in 2017 or around 20K, everyone was speaking about 100K. Yeah, so don't be fooled by all this moon boy stuff you see all around. Okay, so we were very overextended from the bull market. So in February we tested it, we came down, we came shortly above it, and boom, we got rejected out of it. And from there we kept on being rejected. Like, hit the bull market support band, down, hit the bull market support band, down, hit the bull market support band, down. Now here you can see how these like trading ranges work in a bear market. Here, very tight range. Okay, you could have dollar cost average Bitcoin right here around the 6K, and then you would say, well, hey, shit, but now it goes even lower, right? Now, if you would be out of money here and you would have bought all your Bitcoin here, fine, leave it. You know, if you still have money, you buy more here, because what you know is that new cycle will be coming, right? New cycle will be coming. You just need, as a hodler, you need to be patient. You need to be patient. If you don't have patience and you cannot stick to the plan, this game of investing is not for you, all right? You go do something else, work more or something, but this game is not for you if you don't have patience, okay? Because, yeah, just over a few months later, we cross above the bull market support band, and boom, you're in the bull market. And look what we got here. Again, very beautiful M formation, okay? M formation, down. So where are we right now? So most people say, oh, Bitcoin's going to go to 100K, 200K. This is just a shakeout, blah, 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 blah. It's bullshit, okay? Don't listen to people that spread nonsense, okay? What we saw here is a huge crash. That's a crash. I mean, this is not really a crash, but this is a crash, okay? That's in a within 1 day time, that's 26% right there, right? So after these huge crashes, if you are a swing trader or a scalper, like on the lower time frames, it's always good to buy the bottom. As soon as this bottoms out, it's always good to buy, because you know Bitcoin is going to go back to test the 50 EMA on the 4 hour and the 1 hour, which usually means it's fanned out from it. Like if I put this on the 1 hour, you will see 50 EMA. See how far away it is from the 50 EMA. This is what a market maker does. It makes sure that these are controlled moves. This is volatility. When volatility hits a chart one way or the other, if this would be price going up, it would be going down. If it's price going down, it will be going up. Like, that's just how it works. So the volatility will always always be corrected, right? So if there's a lot of volatility down, it will go back into normality, and normality is price in and around the 50 EMA on the 1 hour and the 50 EMA on the 4 hour. Let's look here. It goes back to the 50 EMA zone. This is this purple zone on the 4 hour. The problem now is, though, this is the bull market support band. You just saw what happened in previous bear markets. If I keep drawing this bull market support band, it will go like this and start to come down. We tested the bull market support band here, yeah, and we got rejected. And this is a very bad sign. That's a very bad sign. That's, for me, a sign that we are hitting a bear market. Now, if you're very invested in Bitcoin or into any other cryptocurrency, you would say, "Oh, this is shit because I'm losing my money now," and blah blah blah. It's not that bad. Like, it's actually really great, because we just said that you make your money in the bear market. So if you want a good place to buy, well, here you get it, right? This is the place where you get it, in the bear market. So this is a great opportunity for you to get more. And also, it depends a bit on where you are. Like, if you have a big bag, you don't want to ride your bags all the way down to the bottom, but you also don't want to necessarily sell at a loss. Like, the point is, why are you in a loss right now? Is because you bought in the bull market, and it's exactly what I just explained. You don't want to buy in the bull market, because if you bought back in the bear market, yeah, and I'm not talking about this bear market, but the one in 2018 and 19, you would be still well in profit. So you have so much time to look at price action, and you can say, "Oh, okay, now I'm going to go out," right? You could, and so that's the whole point of buying low and selling high. Okay, I've got a little projection here, and this is just for my own let's say future projection, where I see Bitcoin retesting 2017 all-time highs. This doesn't mean that Bitcoin will go there, but it's definitely possible, right? And together with the Fed that will have their meeting today, and they might say, "Hey, let's push up the interest rates." This is where things can get ugly in the market and in the stock market. So then there's one last thing where you can recognize when a bull market is out of steam, right? Is when you put your chart on logarithmic. Yeah. Now there's a lot of stuff going on here. Let's zoom out a bit. And yeah, here you go. This is just a little projection. Like, nothing what I'm saying here is financial advice. I'm just trying to teach you how not to lose money in these markets, right? So here we have the low of the Corona dump, basically. And if you would connect these lows like that, yeah, makes sense, right? Connect low there, close to here, low there, support there. And what happened then? We have break of support here, right? So when on the longer time frames, price start, and on the longer time frames, you can draw a support line, which is quite simple. You just saw me doing it. And price rejects it. Yeah, you could even put it a bit more like this, and it retests there and rejects it. So the previous long-term support becomes resistance. This is where you should be very cautious. I mean, let's look at total market cap. There's a lot of people talking about 3 Bitcoin cycles, yeah, or yeah, People talk about 2011, 2013, 2017, and then this one, which would be 4 cycles. Well, yeah, if you're a short time frame, you could call it 4 cycles. I call it 2 cycles. We have two cryptocurrency cycles. This is the total market cap excluding Bitcoin. So these are the market caps of all the altcoins. Okay, this is the very early days. Yeah, you start actually with a correction, ABC correction, and then impulse 1, 2, 3. This is a very long one. This is one bull market. Then bear market from 2017 to, let's say, Corona dump, and then 5. So right now we are at the end of impulse 5, which means we're gonna get a correction. Okay, where this correction is gonna end up, I personally believe it's gonna retest this all-time high. It's likely, but it's not guaranteed. But likely we could come down back to $500 million market cap for all cryptocurrencies together. Well, that doesn't mean that every coin will go minus 72%, but a lot of coins will go down. Some the scam coins I just talked about, they will go down 100%. So you have to think of like, oh wait, there's also thousands of scam coins, meme coins that are worth nothing, literally. So they could definitely go down 100%. So this puts a lot of pressure on a total market cap chart like this, right? And what you can see here is, again, the support line, support here, pretty much support here. I mean, it was a bit of a struggle here, but that's just because, you know, at the start of the struggle, this point is just that this was an overextended move, because this was a happening that normally, you know, we don't always have pandemics. At least I hope not every few years, let's say, right? So it's a one in a lifetime, hopefully, experience. So therefore the market cap struggled a bit over here, but then found perfect support here, perfect support there, and got rejected here, right? So sure, we can go, like, I can be wrong, we can go to 3 trillion, we can go even to 10 trillion if the fundamentals line up, and I will get back in. But for now, I am standing on the sidelines and I'm waiting for this correction to play out the way I imagine it, and together with the Bitcoin correction that I imagine it. And it doesn't mean I'm right. This is no financial advice, but this is how I see and how I look at the markets today. So thanks everyone for watching this video. It's a long one, I know, but I think it's worth it to watch a video that's 1 hour and you kind of really get to understand a bit more fundamental aspects. This is what I call the composite strategy, where I really add up all the parts that influence the crypto market, or in general the markets. So that's the financial markets, it's the fundamentals, and it's the market maker, right? So we need to look at all of these aspects, and if all these aspects line up in towards more bullish price action, we are bullish. If all these aspects are turning into a more bearish situation, we need to be very cautious. All right, I will upload more videos. I will also look at a course where we can really dive into specific aspects, where we can really look into, you know, premium videos, which you might have to pay for, but I think it's very worth it to pay $50 for a course of videos that actually prevents you from making stupid losses, right? Because a lot of losses are just not necessary, right? Keep in mind to be patient, you know. Bear markets take a while. This one took that's 350 days. The one I lined up here is almost 300 days. You know, bull markets take a long time. This one took 800 days. This one took 1050 days. Investing is about patience. You don't want to FOMO in, and you don't want to panic out. You want to buy in the right zone and sell in the right zone, and make sure you play the market from a position of strength. So that's it for now, guys. I hope you enjoyed this video. I would be super happy if you like the video and share it with your friends that might be in a tough situation, so they understand where we are right now. Again, full disclaimer, this is not financial advice. I can be super wrong, but this is my personal view of the market right now. Goodbye.